Please confirm if I can start. Okay. So have I solved any question? Have I solved any question? No. No, so capital letters. Okay. All right. Okay, let me solve illustration one. I sent the notes before, but let me resend it again. Or if you have it, just send it to the group, please, so that everybody can have access to the question. If you have it, please send it to the group. Please let me know once you've done that. If you cannot hear me, it could be your network. But let me even allow people to speak. Just that I'm always tired of this noise that comes with it. But I think I should remove people instead. That will work. And allow. Okay, so hello, can you hear me?
Yes, sir, we can hear you. Good evening, sir.
Good evening. So have you sent it to the group so that we can move on straight up?
You can't send it to the group. Only admin is allowed to send anything.
Okay, that's the group that you guys were fighting there, Abi.
Yes, sir.
Okay. You see now, that's the reward for fighting.
You've not created YouTube link for others to join.
I have. Maybe I have not shared the link. Wait, I'm coming.
Can I share with you privately?
The notes?
Yeah, the capital allowance.
Yes, you can. Yes, you can. That's fine.
Okay.
Sorry. Oh. Can you all hear me?
Yes, sir.
Okay, good.
Yes, sir, we can hear you.
So we can start.
I've shared it, sir.
Okay, thank you. I'm trying to share the link, the YouTube link, with many people. Sorry, that group where you guys are fighting, what's the name of the group again, so that I can send it to you? Is group what? Please remind me.
Group 5. Group 1. Group 1, sir.
Group 5.
And 1.
Group 5.
Okay. All right. Okay, so let's go ahead. So last class we started to look at capital allowances, and I remember that the first thing we discussed in that class was that we defined capital allowance to be an allowance that is granted to taxpayer for making use of qualifying capital expenditure in a particular year of assessment. Also in that class, we discussed about the types of allowances, and we said we have annual allowance, which is chargeable through the lifespan of the asset. We said we have initial allowance, which is once in the lifetime of the asset. We said we have what's the name now? We said we have investment allowance, which has been scrapped by virtue of Finance Act 2023. So beginning from September 2023, that has been scrapped. Right. So there's no longer investment allowance and rural investment allowance. And finally, we were able to look at balancing adjustment. So just to consolidate or to make our point practical, let's look at Kabiru Abdullahi. So let's look at this. All right. Can we have a volunteer to please read? If you can see my screen. Can you see?
Yes, sir.
Okay, please go ahead.
Okay. Akpabio Abdullahi Nigeria Limited was incorporated on February 1st, 2020 and commenced business on June 3rd,
No, sir.
2020.
Please, we need material in group 2, sir.
Can somebody send it?
The adjusted profits of the company based on the audited account are given below. Period ended March 31st, 2021, 11,000. Year
Okay,
ended 31st,
correct.
2022, 14,500. Year
All
ended,
figures assumed correct. Let's keep.
okay, you are required.
No. The total capital expenditure as follows.
Okay, the capital expenditure are as follows. Machinery, February 21st, 2020, 3,600. Factory building, February 28th, 4,200. Furniture, June 1st, 2020, 720. Delivery van, January 17, 2021, 900. Motor car, June 9, 2021, 1,300. Office equipment, February 21, 2022, 530. You are required to determine the basic period for computing adjusted profit and capital allowance for the first 3 years of assessment. B. Compute the capital allowance claimable for the first 3 years of assessment in respect of the qualified in capital expenditure of the company.
Okay, what that is qualifying capital expenditure, not qualifying. It's qualifying present continuous.
Okay,
So that's the name for
qualifying.
name. Yeah, that's the name. It's my mistake, not yours anyway. So it's qualifying capital expenditure. So you may want to correct that. There's nothing like qualifying. It's qualifying capital
Okay,
expenditure.
okay, sir.
So these steps. So now this examiner has made life easy. Is a man. He has made life easy for us. He's saying that we should compute, but in case the examiner does not mention, these are the steps to computing capital hours. One is to determine the basis period for accessible profit. If you don't understand the basis period for accessible profit, you may want to go back to the previous classes I held and watch the video, because I believe that will help. Determine the basis period for accessible profit. Two, determine the basis period for capital allowances. 3, allocate the QC. And 4, determine or better use, compute capital allowances. All right. Now, it's important for us to note that assets purchased what is up now before the date of commencement are deemed to be purchased on the day of commencement. However, this on the day of commencement are deemed to be purchased on the day of commencement. So that's it. Yeah, so let's complete a Fabio. So I will do step 1 to 3 in one. So I will say determination of basis period, accessible profit, capital allowances, and allocation of QCE. So we have a basis period, accessible profit, basis period, capital allowance, and then allocation of QCE. QCE. Now, don't forget, we said that the examiner said we should complete for 3 years, and we are using the Finance Act 2019. So, first, it's important for us to also note that please confirm that you can hear me.
Yes, we can hear you.
Basis period for accessible profit is not different from basis period for capital allowances, only that there should be no gap or overlapping
In this pack.
in the basis period.
Please, where is the question, sir? Sorry.
It's on the screen or it's on the group, and anyone you want.
It's not among
So-
these. I have about 3 of them. It's not there.
Okay, no problem. Shall I check your screen? I'm sure you can see the screen. If we cannot see the screen, you may want to log out and log in again. Yes. All right, so that's it. So let's move in and understand it. So the business commenced on 1st June 2020, and the rule says from the date of commencement, that's from 1/6/2020 to 31st December of that same year. No, sorry, to 12 months, to the first accounting year end, sorry, from the date of commencement to the first accounting year end. And the first accounting year end is 31/3, right, 2021. Meaning that the year of assessment is going to be 2022 year of assessment because we are doing it on PYB. So in 2023, you start a day after the previous 1/4/2021 and end it in the next accounting year, and that's 31/3/2022. And then you do 2024, you do 1/4/2022, right, to 31/3/2023. Don't forget that the rule says, or the law states, that there should be no gap or overlapping in the basis period. There should be no gap overlapping in the basis period. There should be no gap overlapping in the basis period. So there should be no gap overlap. If there will be no gap overlapping in the basis period, what we are going to have then will be that since there's no gap here, you will notice that there's no overlapping by virtue of the Finance Act 2019. There was no overlapping here, so I can as well repeat because the rule says there's no gap overlapping in the basis period. So I can as well just repeat to 31/3/2021. 1/4/2021 to 31. Please, can you hear me?
Yes, sir.
Yes, sir.
1/3/2022. Then we have
Please, YouTube link, YouTube link.
1/4/31. I've sent it to you guys now.
You didn't send it, sir.
Just Google, look,
Check.
just Google my name on YouTube. It will bring it, then copy and paste it to the class groups. I mean, this thing, look to you. I've sent it to all groups. I'm checking again. I've sent it to all groups now. You want to check again? All right. So that said, so let's look at these assets, right? Sorry, just a minute. I'm coming. I'm coming. All right. That said, so let's go ahead. So allocation of QC. So let's look at the assets, right? The assets are, we have machinery. The machinery was purchased on February 2020, on February 21, 2020, and that's before the date of commencement. That's before the day of commencement. So if that is before the date of commencement, don't forget we said that assets purchased before the date of commencement are deemed to be purchased on the day of commencement. So by implication, it means that that machinery is purchased on the day of commencement. Right. So factory building is also purchased before the date of commencement. So it means that I will do factory building. Right. Then delivery van is purchased when? Please talk to me. When was delivery van purchased?
Date of commencement.
On the day of commencement. So it will fit in the first day, I mean in the same year. So the next asset we have is delivery van. Delivery van was purchased January 17, 2021, and if you check carefully, it also falls in the same year or in the first year, because we're using this date for our allocation. So we have motor vehicle because it belongs to the class of motor vehicle. Then the next one we have is what? Motor car, June 9. So June 9 is in the second year, so I will say motor vehicle too, because they're in the same class. And finally, I'll look at office equipment, and office equipment is February 2022, also the same year. So I was office equipment. All right. So do you have any question for me at this point? Let me accommodate one. Yeah. Go. Yeah. So please, do you have any question for me? Do you all understand the allocation? Yeah. So if there are no questions, permit me to move on. So now the next thing I want to do is to allocate QC, is to allocate QC basically. And if I want to achieve that, if I want to allocate QC, so the first thing I need to do in that in that case is that make sure it's not trying before bringing Sorry, apologies for that. My son just came. All right. Can we move on? Okay, good. I need one person to keep speaking so that I will know if my network is faulty. I need
Yes,
at
we
least
can
one
move
person.
on. We can hear you clearly. We can hear you
Okay.
clearly. We can hear you.
Okay, apologies for that break. So let's go to computation of capital allowances.
Sir, please, I have a question.
Yeah, please go ahead.
Okay, so I'm just confused why you're using the basics period as March. I thought it's supposed to be from June to May. I don't know if
What's the
because I'm
accounting year end?
accounting year end is March.
So the rule says it must end in the accounting year end, Abi. So it means we must always make sure it ends in the accounting so that we will not flout that rule that says it must end in the accounting year end.
Okay, for this qualifying capital allowance, just put the month to confuse us.
You mean which month are you talking about? And which month are you talking about?
You know the month for qualifying capital expenditure is different from.
Yes, so you
It's
use
different from.
like I said, you use those months to allocate the asset. So, for instance, you see that this asset was purchased in February 2020, in February 21, 2020, and it was before June 2020. So I assume it was purchased in June. The next one, February, I assume it was purchased in June. The next one, June, actually is on June. So the next one, January, I checked here and see that it still fell in the same period. So use that date basically to allocate to the respective years of assessment.
All right, thank you.
You're welcome. So let's look at the assets that we have. So we have machinery, we have factory building, we have furniture and fitting, we have motor vehicle, right? We have office equipment, and we have Tutor, right? So now don't forget we have investment allowances, but we said that it has been scrapped beginning from September 2023, meaning that asset purchased after that date will not qualify, right? So you have to be careful of when the asset was purchased so that you will not misrepresent the asset, right? So it's only asset purchased before that date that would qualify for allowance, right? So we have investment allowance and we have annual allowance, right? So now machinery qualifies for investment allowance, but all other assets do not qualify. All other assets do not qualify because investment allowance is on only plant and machinery and plant and equipment, right? So initial allowance, right, would be 50%. You will be given this rate in the exam, so you necessarily do not need to cram it. 15%, right? 25%, 50% is constant. Anyway, 50%,
50%.
right? So annual allowance for machinery is also 25%, 10% for building, 20% for F&F, 25%, right? For motor vehicle, 25% for fees, equipment, right? So all figures are denoted in thousand. I hope you are following, please.
Yeah.
Good. All right, that's said. So let's look at the cost of the asset. So I'm dealing with 2022 year of assessment first. I'm dealing with 2022 year of assessment first. So if I'm dealing with 2022 year of assessment first, it means that what I would do in that is that, right, is to deal with all these assets that were allocated to this year. Right. So the first asset is machinery, What's the cost of machinery? 3.6 million.
3.
Abi? Factory building is 4.2 million. Furniture and fitting is 720. Mod
20.
delivery van is 900. Right? So I'll go to investment allowance. Investment allowance. So investment allowance here is 10%, right? It does not form part of the tax sitting down value of the asset. It does not form part of the tax sitting down value of the asset.
360.
It does not form part of the tax. However, there's no rule that says you must not put it here. Right? There's no rule that says you must not put, under the machinery. But if you have stepmother like myself, your stepmother is a bit active, still on the job, you get, or negative home support, you must not deduct it. So in case you would forget and mistakenly deduct it and will render your answers useless, I will advise just to put it in the total column. It does not attract mark for being there. Rather, if you mistakenly deduct it, it will deduct your marks significantly, right? Because your allowances will be wrong, and even your tax down value here also will be wrong. So you get, does it make sense?
Yeah.
Yeah. So what is
Yeah.
50% of 36? I think it's 1.8.
Yes,
What
1.8.
percent of 42?
630.
630. What's 25% of 720?
180.
So what's 50%? Total, please. Please give me the total figure.
450.
Yeah?
₦3,060.
Say that again.
3,060 naira.
Okay. 3060. So annual allowance. All right. So let's go to our workings. What do we have in our worksheet here? So we have your annual allowances, right? So what are your annual allowances in the first year? So let me reiterate this point that annual allowance is not prorated based on when the asset is purchased, but it is prorated out to number of months in the basis period in the case of commencement, right?
Yeah.
It is prorated down to number of months in the case of commencement. So if you look at this basis period, for instance, this basis period, how many months do we have there from June to March?
10 months.
So you have 10 months. So it means that your annual allowance for this asset will be prorated because the basis period is not up to 12 months. Right? So let's look for the first asset. Machinery. Machinery is 3,600 minus 1,800 times 10 over 12. Sorry, any way you do it, you get the same answer anyway. Times the annual allowance rate, 25%. You got me, please. So the same thing I will do for factory reading. I think my network is better, Abby.
Yes.
Yes, it is. Yes, it is.
Okay. Times 10 over 12 times 10%. So let's go again with furniture and fittings. Please, to make it fast, let's to make it fast, you can just start giving me the figure once I'm done typing. I hope you are understanding what I'm doing. Right? And then delivery van, which is motor vehicle.
Machinery 375.
Okay, hold on a minute. That's 900 minus 450 times 10 over 10 times 20. So please help me. 375, Abby. What do you have? Please help me.
2009. 297.5.
297.5, Abby.
Yeah.
Next one.
90.
108.
What was the concept?
90.
90. Okay. You mean motor vehicle is 90?
No.
93.75.
93.75.
93.75, you said?
Yes.
Yes.
Sorry, don't give up. It's too early. 375. 297.5. 90. 93.75. Total now. Please help me.
856.25.
856.25.
0.25.
Tax is a value. What do you have?
Sorry, the total is 856.25.
25, not 65.
Okay. Let's go.
1425.
You know you are deducting, Abby.
Yes.
Okay. Next one.
1425.
1 4.
I guess that one is 865.25. The annual allowance.
865. Okay. Instead of you say you make a mistake or you made a mistake, you're not guessing. Thank you for being polite. It's commendable.
3272.5.
That's right.
3272.5.
Okay. Let's go.
Let me try and fix this. 450.
450.
Next one. Next one, please.
356.25.
356.25. Okay. So now for this, you add up the total for the allowances. Add up the total for the allowances. So what do you have? You are adding up vertically, not horizontally. For the total, you are always adding up the allowances. That's what you have in the total column.
5503.75.
5503.75.
no. Sorry. It's 4285.25.
4285.25.
Yes.
4276.25.
4285.25.
4276.25.
All right, good. Okay. So 2023, why are you in
Hello,
right?
sir. Hello, sir.
It's
Sorry.
wrong.
The figure is wrong. It's supposed to be
Yes.
4285.25.
4285.25.
Okay. So let's. So I mean we should add the two together and divide it by 2. So I'll pick the average of the 2. So let's do 360 plus 30 plus 865.25. That's 4285.25. Is that what you have? No, my figure is wrong.
Yes.
Wait, let me try it again.
4285.25. Correct, sir. Your figure is correct. 4285.25.
The figure is correct, sir.
0.25. Okay.
Annual allowance.
Sorry,
So the annual allowance is wrong.
The total for the annual allowance is wrong.
The annual allowance is wrong. 856.25.
Let's check it. 35 plus 297.5 plus, thank you, plus 93.75. 856.25. Okay. And somebody corrected me politely. Oh. I don't want to mention her name.
So sorry, sir.
After I've commended you, it's not good for you to doubt change my word now. So that's 4276.25. Right. Makes sense, Abby? So let's look at the additional assets that we have. We have some addition. So during this 2023 YOA, all asset was purchased. So we purchased motor vehicle, and the motor vehicle was how much? 13.
13.
Our base agreement is how much?
550.
So
530. 530.
right, so we have 13 and 560 or 530, right?
It's 530.
So you have initial allowance, right? Because there's none of these assets that qualifies for investment allowance because it's only chargeable on plant and machinery and plant and equipment. So what's 13 times 50%?
650.
That's right.
What do you have?
650.
650, sir.
650. Then the next one, 50%.
265, sir.
265.
So let's add it up together. What do you have?
915, sir.
Yeah?
915.
915.
5.
So now let's look at annual allowance, right? So now, for in the case where you adjust your allowances, right? By adjusting, I mean in the case where you prorated your first year. In the case where you prorated your first year, so your annual allowance for the subsequent month, right, will have to be adjusted, right? Will have to be adjusted to cover for that first year. Because if you don't do it like that, you would not have allowances covering the total useful life of the asset. And don't forget that your allowance must cover the total useful life of the asset. Right? Your allowance must cover the total useful life of the asset. Do you understand what I just said? Hello, is what I said just is what I said clear?
Yes, it's clear, sir.
Okay. So if it is clear, that means that we can now go ahead. So subsequent to the year, subsequent to the first year.
Please repeat it, sir. Please repeat it, sir.
So I was saying that for the first year, right, your annual allowance will have to be prorated because the basis period is less than 12 months. Right. But in the case where you prorate the first month, so apologies for that break, right? So I was saying that in the case where you adjust your first year, that means you prorate the first year down to number of months in the basis period, right? So subsequently, you need to then now try as much as possible to adjust the tax return value in such a way that the balance of the tax return value after the first year will cover the remaining useful life. So now the question you want to ask me is, how do I determine the useful life? To determine the useful life of an asset, it is 100 divided by annual allowance rate in absolute value. Right? So in absolute, that means, so let me give you an example. So let's say, for instance, your machinery is how well, machinery is how many percent? Please, can you hear me?
25%.
So if machinery is
25%.
25%, so that'll be 4 years.
machinery is 25%, right? So you
Yeah.
have 100 divided by 25, so that will give you 4 years, Abi?
4 years, yeah.
Right. So now remember that we want to assume that this first year that we prorated is a whole year. Right? We want to assume it is a whole year. Meaning that for us to assume that it's a whole year, this asset is no longer eligible to use 4 years. It's supposed to use 4 years minus 1. Does it make sense? So meaning that if I want to determine the annual allowance subsequently, for instance, machinery will be subsequently post commencement. So it means that my machinery, for instance, will be equal to, please help me, 1425, right? Because that's the tax return value divided by 3. Does it make sense? So
Yes,
my
sir.
building, do you have any question?
Yes, sir. So
So
why are
again,
we?
an allowance subsequent. Please go ahead.
Hello, sir.
Yes.
Yeah. Does it mean we are going to use a straight line method in this aspect? Thank you.
Yes.
And over.
So actually, an allowance is supposed to be straight line method. The only reason we are adjusting is that the first year was prorated, so it will not be complete if we do not adjust this balance, right? That's why we're adjusting. But an allowance actually is on straight line method. Do you understand?
Yeah. Thank you so much, sir.
Very, very useful life. So do you have 145 divided by 3? What do you have?
475.
475. Then you have what is factory building. What do you have? 3272, right? 3272.5 divided by 4, Abi? No, sorry, divided by 9, right? What do we have?
363.6.
363.6, right? Then the next one that we have is what? Furniture and fittings.
450 divided by 4.
Divided by 4, right? What do you have?
112.5.
So how is factory building divided by 9?
It's 10 years. The
So
asset will last
again,
for 10 years.
so let's say, for instance, this asset is 10%. Don't forget, we said to determine the years, just do 100 divided by the percentage in absolute value. So 100 divided by 10 will be 10 years. 10 years minus 1 will be 9. Does it make sense?
I get that. I get that.
So let's go ahead.
Sir, please, sorry, I have a question.
Hello, sir.
Sorry.
Yeah, please go ahead.
Sir, for the first year, 2022 year of assessment, should in case we did not prorate, now the annual
It's
allowance
straight line will be
okay,
constant.
so we just repeat the annual allowance of 375 in the 2023 year of
Exactly.
assessment, right? Okay.
Exactly, because if you had done divided by 3, you would have gotten the same answer. The only reason
so
this answer is different is because the first year was prorated.
okay.
Right? So the assumption for the first year was that the number of months in the business period makes 1 year.
Okay, so now, sorry, sir. So when we now get to the last year, which is the fourth year, instead of us to make it new, we now remove 10 hour from the annual
Exactly.
allowance of that particular
Yeah,
one.
I'm still going there. I'm
Okay,
still going
all right,
there.
thank
Yeah.
you.
Don't worry.
Hello, sir. Sorry. Good evening, sir.
Yeah, good evening, Chief.
Yeah, sorry, please. Sorry for drawing you back. From that, the machinery that you divided by 100 divided by 25, why did you deduct the one from the 4 years?
So again, when the first year is prorated, you will assume that the first year is 1 year. That's why you're deducting the one.
Oh,
Do you get it?
uh,
Yeah. So 356.25 divided by 3, what do you have?
118.75.
1.7. So give me the figure one after the other. What do you have?
475.
475. Next one.
363.6.
Say that again.
363.6.
Next one.
112.5.
Next one.
118.75.
So now let's now go to the annual allowance of the new assets. I'm just separating it for for easy understanding. So maybe my next example, or maybe when we get to the core between and BCIT, you may see me lump it up. It doesn't have any effect. But if you are sure that you can do lumping, it's fine. But if you are the type that have stepmother like myself, you can still make sure that you do it separately, because again, my stepmother has been very active. You can see I'm sneezing some money. So you can imagine if I now if I now go and lump it up in exam. Do you get what I'm saying? So don't make that mistake. If there's no problem lumping or adding it up before bringing your answer here, it's just that again, it's just for and for explanation purpose. So let's go motor vehicle. Don't forget that this basis period now is 12 months. So we don't have any problem. So what do we need to do in this case is just, what do we have?
The
1.3 is
cost
the new asset.
1.3 minus
Minus 650
650
times
divided by
25%.
4.
Or you can do divided by 4. Anyone works. Then next to office equipment, the same thing will work. Is cost minus initial allowance. So that's how much?
530 minus
Minus
265
265
divided by
times
25%.
All right, please press it carefully.
The first one is 162.5.
162.5. Next one.
66.25.
My charger. Laptop. So let's go. 162.5, Abby. And then the next one is what?
66.25.
Tutor.
228.75.
328.
228.75.
228.
0.75.
Correct with the tax within non value. So now you can do the previous tax non value plus addition minus the allowances. Does it make sense? So in the case where there are no addition, I mean those ones are 0. Right? So let's go. Please help me.
$950.
Say that again.
950.
Machinery,
950. Machinery, 950.
Okay, let's go.
2908.9.
Next one.
337.5.
337.5.
Next one. Don't forget you're adding the addition. Taxable value plus addition minus the allowances. Let's go. Okay.
One three five five.
725.
1355.
725.
725.
725.
Okay, next one.
198.75.
One. So let's go ahead.
198.75.
So let's add the annual allowance of build assets together first. So we can be able to. I think I missed that.
2213.6.
0.6, Abby.
2213.6.
All right, so let's add the allowances. So again, for these allowances, for this total color, you are ignoring the previous year. They're only adding for the year. They're ignoring the previous year. So let's go.
Sorry, sir. The annual allowance code is wrong.
So let's
1069.85 for the old annual allowance.
1069.85
475
for the annual allowance.
So 10.
1069.85 for the other allowance.
106.
1069.85. 1069.85.
Let's go. You got me.
Two two one three. 213.6.
2213.6.
Hello, sir. Sorry, before we continue, this addition for motor vehicle, I don't know. The tax written down value is wrong. Oh.
So we have 356.25 plus 3. What am I doing now? You have 3.
You add the addition plus the tax within that value, then subtract the initial value, the initial allowance.
Yeah, I know. It's just the more that I keep managing.
It's right now. It's right now. 356.25.
It's 725 now. You may want to check another calculator.
Okay, now please, for the tax within that value for the total side, are we not adding the 4,270?
I said no.
Okay. Okay.
You know the previous year. Allowances
Sorry, sir. The addition. Why are we not adding the addition together? I mean the 13 plus 530.
Plus what?
The addition.
Okay.
The
Under the
13,
total
that 13 and 530. Yes.
Under the total, Abi. So the reason
Under
is
the
because
total column, yes.
under this total, what we want to achieve is the total allowances,
okay,
not the cost of the assets. Their work here is just to add up the total allowances. Do you understand? So it's not like your typical asset schedule where you want to derive your carrying amount. No, What you want to derive by this total colon is just the total allowances that is eligible for being utilized in the year of assessment. Do you understand?
Okay.
Yeah.
Okay, thank you.
Sorry,
You're
sir.
welcome.
Sorry for distracting. Hello, sir.
Yeah, go ahead.
Please, sir. In a situation whereby the company is a pioneer
Don't worry,
company, are
don't
we to
worry,
look for?
don't worry, don't worry. I mean, you are getting faster. Let's understand the basics before even moving to Pioneer. Pioneer has tax holiday of
All right.
3 years, renewable for 2 years. During this period, there's no allowance, if that's what you want to ask. But I really do not want to. Again, we have some people in this class whose attempt is the first. So imagine you're in Pioneer, the person becomes confused. Do you understand? So I would actually
All right,
appreciate
sir.
if we can take it a step at a time. But I hope my comment answered your question.
Thank you, sir,
Not
for
true.
considering people like us. So.
Yeah.
What I wanted to ask is,
Hello, sir.
like, for instance, if it's a pioneer company, do we do basic periods
Yes,
or
so there's
access?
tax holiday. But don't worry, when we get to the bridge, we will cross it. In case
All
you
right.
studied up to that, in case you studied up to that extent, you can just check out my video on pioneer legislation, pioneer status incentive. In case you studied up to that level, I'm sure I've addressed that in those classes in previous diets.
Sir, please, I
But
have a
again, the tax
question.
holiday.
Sir,
Yeah.
I have a question. Sir, please, my question is like in exam hall, do we need to be writing down all these workings or we can just punch calculator and put in the answer? Because I feel like writing the workings will be taking a lot of time.
Okay, so let me explain to you that don't expect capital allowance in your exam. So it's not something that will be tested in your exam. Or however, I'm not sure you'll be able to answer number one without understanding capital allowance. But it will not be tested. But you cannot answer number one correctly without knowing capital allowance. So to answer your question in just one word, you don't need to. If you are comfortable with pressing your calculator and you are sure that your numbers are right at first attempt, then you can move on. All right. So that answered. Do you have any other question before we move on? So don't forget I said that your own allowance is going to be on straight line. Remember I said something like that it's supposed to be on straight line. For you to check if your answer is right, remember that this asset is supposed to use how many years?
4 years, sir. 4 years,
4
sir.
years.
Good. How many years has it
4
used now
years.
by our assumption?
2 years.
So how
2
many
years.
years remaining?
2 years. Remain 2
Yes.
years, sir.
So to be sure that you are actually on the right, do 950 divided by 2, you should get 475. That's to validate that it's supposed to be on straight line method.
Yes, sir. 475.
So yeah. So for me to avoid that stress, I can just continue to repeat until we get to the final year of the asset. So help me add the allowances together since I've adjusted these two. Help me add the allowances together. And don't forget that I didn't put it for the second year. So all of them will work that way. Figure me, please. Let's add the allowances for motor vehicle together so that we can move fast.
281.25.
281.25.
281.2. Tutor. Please help me.
1298.6.
So what do you have? TWD, have you? 475.
$2545.3.
2545.
0.3.
Next one.
0.3. 0.3.
The next one is
The next
225.
225.
Next one.
443.75.
Next one.
132.5.
Say that again.
132.5.
Okay. So total now will be 1298.6. Please mute your mic if you're echoing. So that's it. The examiner said we should do for 3 years. But the law provides that you should keep 10 naira in the final year of the asset. But we're not doing that for this because we've not gotten to the final year of the asset. But please note that the law provides that it should remain 10 naira and not 10,000. It is 10 naira should be remained in the book and not 10,000. So there's difference between 10 naira and 10,000. So if you are doing all figures in thousand, it's something you want to take note of. Does it make sense?
Sir, please take it again.
So the law provides that you should take 10 naira as the tax down value of the asset in the final year of the asset. So let me do 2025, for instance, to make it make sense. Actually, just Jara. So the law said that I should maintain 10 naira. So in this case, you will realize that this asset has gotten to the final year. A very good indicator of it is that you will realize that the tax down value is the same as the annual allowance. Right? So that's to also show you that it has gotten to the final year. So I will say annual allowance for this case will be 474. $474.99 because I have to keep 10 naira. And don't forget that this is written in thousand. So 10 naira is 0.01. Do you understand?
Exactly.
Yeah. This is 0.6. So this is also no, these are not gotten to the final year, right? So again, you realize that this motor vehicle has gotten to the final year. Abi? The first motor vehicle that we bought. Are we together?
Hey.
Excuse me, Sake.
Yes. Please go ahead, Mrs.
Okay,
Amua.
so for that 10 naira, my network froze.
Okay.
Yeah, good evening, sir. My network froze a bit. For that 10 naira, so if we are working in thousands, that means we are going to do 10 divided by 1,000, right?
Yes, so just deduct it.
And that
Or
will
just
be
take it as 0.01. Yes. All right.
Okay.
Yeah. So 443.75, right? So you realize that this one too has gotten to the final year. But like I said, I didn't notice because I lumped it up. So actually, if I had separated it, it would be easier. But nothing has spoiled here. So what I'm just going to do here is to do 281.25 minus 10 naira. That should give me 281.2 what now? 24. Is that correct? Can you hear me?
Yes, it's correct.
Yeah, good. 0.24. All right.
Correct.
So let's move on. But I can still move on with office equipment, right? And office equipment here is how much? It's still full year. I can move on with my full year asset. So let me add up now.
Sorry, sir.
What do you have?
Sorry, sir. For the motor vehicle, I thought you said
Yes.
you're minusing the annual allowance minus 10 naira.
Yes.
This place is for annual allowance, right?
What's it?
To get our.
Say that again.
I mean, for.
If
I
you
mean,
can be
to
more
get our annual allowance for 2025. I said to get our annual allowance for 2025.
Okay.
we have to reduce. We have to minus our 10 naira from the 2024 annual allowance, right?
Yes. Yes.
Okay. 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 That means for the motor vehicle, the figure is incorrect. It's supposed to be 271.25.
So what's the annual allowance for the
If I'm not
previous year?
mistaken. 281.25.
So do 250. Don't forget all figures are in thousand minus 10. Because the law did not say 10,000, it said 10 naira. Do you understand? That's why I was emphasizing the fact that the law didn't say 10,000, because I know that's a common pitfall in the exam. Do you understand?
I get
Hello,
you.
sir.
Yeah.
I was thinking the motor vehicle. I thought it was is 2 annual allowance that is there.
Exactly. So now only the old one has used up to 4 years. The one is still going to leave, Valley. Do you understand?
Yes.
So meaning I'm only taking, that's why I'm only taking 10 naira, because I'm assuming that the new one, the old one has gotten up to the 4th year, but the new one is still in the
Is it from my
Can you hear
end?
me?
I can't. Yeah. Okay, we can hear you now, sir.
Sure, it's better. Can you see my screen?
Yes, sir.
Yes. Makes sense. Sorry. So let's add it up together. What do you have?
One two nine eight
Sorry,
point
sir.
six.
Office equipment. Are we not going to deduct 10 naira?
No. So if you take, it's in the 3rd year, not 4th year.
Okay.
Yeah. So point what? 0.5 it be?
0.6 approximately.
No, approximate. If we had wanted to approximate, we won't be considering the 10 naira.
Okay.
So at this point, it's very dangerous to be approximating, because any approximation can be an issue. You understand?
Okay.
Yeah. So let's do for the second one. So let's play first.
I can barely hear you guys.
It could be a network. So let's. Can you hear
Sorry,
me?
sir. Please, I want to ask a question.
Yeah, please go ahead.
Okay, so is there let's say I want to solve this and I decide to split motor vehicle and delivery one separately.
Nobody's
Is that
going.
okay?
Nobody's going to crucify you for that.
All right.
In fact,
Thank
it's the best way to do it.
All right. Thank you.
For clarity, like I said, if you are the type that have step mother like myself, so you have to make sure that they don't get you at any point. Like you get, but that's on a lighter note, though. You have to keep dodging. So let's go.
2181.7.
218.
1.7.
All right. So that's it. Any question? Any question? All right, Adinka.
I've asked my question, sir. Thank you.
All right, no problem. So your assignment, right? Your assignment is question number 2. Question number 2. That's the assignment. So let me quickly see if I can solve question number 3. Question number 2 is your assignment, basically. Number 3 is going to take me more than 30 minutes. And your tutor said he's going to be in class for 9:30. Do you want me to call him maybe to make the class 10 if he will agree? Or you just prefer SFM? I didn't response. I just
Please continue. Sir, please continue.
some people here are doing SFM, so it's not good.
They can
Call
leave
him
and
to
join the
confirm
SFM, sir.
to extend the class.
Okay. Let's see how that works out. SFM is 9:30 anyway. So let's move on. All right, so let's go ahead. So who's reading? So this one addresses the issue of sale of assets. Don't forget that we said in that class that if you sell an asset, it will result into balancing allowance for balancing charge. Balancing allowance is when the taxes down value exceeds the sales proceeds. Balancing charge is when the sales proceeds exceed the tax written down value. Right? So let's quickly work on this one. Let's go.
Can I read, sir?
Yeah, go ahead.
Atlanta Nigeria Limited is a manufacturer of polythene bags. It was incorporated on January 1st, 2020, but commenced business operation on March 1st, 2020. The following is a summary of its adjusted profits for the respective years. Period ended December 31st,
All figures are
2020.
correct.
Correct, all right, sir. Then the company acquired the following assets. We have the dates: April 5th, 2020, factory building 5,400. January 7th, 2021, 2021, office furniture 7,270, all in thousand. December 1st, 2021, motor vehicle
All figures are
4,500.
correct.
All right, sir. The company sold some of its assets on December 31st, 2024 as follows. Sorry, please. Assets, all figures assumed correct. As a newly appointed tax consultant to the company, the managing director sought your advice on both capital allowance available to the company and the tax liabilities resulting thereof for the relevant years. He, however, informed you during the time of finalizing the engagement that the factory building was purchased second-hand from a company that had ceased operation 6 months earlier. Required complete the capital allowances for the relevant years of assessment. Thank you.
All right, so two things to note here. The first thing is that initial allowance is not chargeable on second-hand assets. Initial allowance is not chargeable on second-hand assets. But are you with me? It can be utilized on second-hand building only. Does it make sense?
Please take it
Please
again.
repeat.
So
Kindly come again, sir. Your line is breaking then.
initial allowance is not chargeable on second-hand assets apart from second-hand building. So if it were to be equipment, I will skip. But for building, because it's relatively has a second-hand value, so initial allowance can be claimed only on building when it is purchased second-hand. But all other assets, initial allowance is not claimed on second-hand assets. Does it make sense?
Yes, sir.
Yes, it does.
So
Okay,
that's
for only
first thing.
building.
Yeah, for only building. It's claimable on building, but not claimable on other kinds
Other
of
assets.
assets. All right. Does it make sense?
Furniture and
Yes, but plus, what's the reason behind them
So,
charging
like I
capital
said,
allowance on the building?
the reason is just because for building has second-hand value, but other assets do not seem to have a second-hand value.
Okay,
Do
thank
you
you.
understand? So most assets that have been transferred, apart from now that vehicle is now appreciating, before vehicle is a depreciable asset. Abi?
Yes.
Yes.
But now vehicle is no longer a depreciable asset too.
I'm
But vehicle
appreciating now.
ideally, eh?
He's appreciating now.
Yeah, it's appreciating actually.
For motor vehicle.
Yeah, motor vehicle. If you bought Lexus in 2022, you don't know what God has done for you. Like God just butter your bread, actually.
No butter.
No, it's only in Nigeria.
Where is the fuel?
I didn't get that.
I say it's only in Nigeria, sir, that you see asset is appreciating now like land.
But asset appreciates everywhere.
But as
I mean,
talking
land
about
appreciates
the
everywhere. I mean to say, land appreciates everywhere.
Yes, land is to appreciate now.
Land appreciates
So,
everywhere.
That's one of its characteristics.
That's why what qualifies for allowance is actually building, not even the land in itself, quote and unquote. So most of the time, though it is land and building, but we typically would not want to depreciate land because we believe building should be what should be depreciated most of the time. Because land in reality, if you had bought land in my village 10 years ago, you don't know what God has done for you again. Actually, Abi?
yes, sir.
All right. So that said, let's move on. So let's move on. I'm actually looking at how to manage my time. Or should I give you the second one as assignment? And I promise that I'll teach you on Thursday. I promise you.
Yes.
Okay.
It's okay, sir, if you promise.
Yes, I promise I will teach you on Thursday.
Okay, sir.
Thank you for but actually with what I've said so far, I've actually solved this question. So maybe you want to lay your hands on question number 2 and 3 against next class. But like I said, it's not so much of a big deal.
So
Really.
we don't have the question.
I sent it to you already.
We'll post it.
No.
It's
Group
on the
4.
platform.
Group 4 has it. Is it not those group that fight?
No, sir, it's not also.
No, it's
There's
not
group
group
5. There's
4.
group 5 that they are
There are
fighting.
Group
people.
5 that is like
Okay. No problem. No problem. So I promise I will teach you on Friday. I mean on Thursday, beg your pardon. I will teach you on Thursday. But please ensure that you get the details ready. And it is advisable you go through what we've done today. You can also check my previous videos on capital allowance on the YouTube page. So maybe that, because I'm sure I've solved these questions on the previous diet. You can just check. But notwithstanding, I will solve number 3 in the next class. And that same class, I'll be doing company income tax. In case you want to think of anything, company income tax is your most likely number one. So let me tell you the structure of your exam. Basically, your number one is either CIT or Pioneer. That's your number one, and they will prefer any of those topics because it tests basis period, capital allowance, loss relief.
All joined together.
They are all joined together. So they want to give you CIT just to test your understanding of those 5 topics: basis period, capital allowance, loss relief, adjusted profit, common income tax computation, and maybe perennial legislation. It's not something. It's not a big deal, to be honest. It's not a big deal. So that's your number one. So is that they do CIT or Pioneer as number one. Your number 2, 3, 4, right, is either they do your double tax, which I think I expected it last night. I think they didn't test it. Those who attended division wanted me to solve it at all cost. I solved it because I knew they were not going to test it, but they still didn't test it all the same. So I won in that case.
Oil and gas.
So I know oil and gas is good. Oil and gas is constant. So number 2, 3, or 4, oil and gas is very constant. Your double tax, your capital gain tax. Capital gain tax is something is that you want to look at. Capital gain tax, oil and gas. If you understand, if you have your hand on those 2 topics, I think you are good to go for the 2, 3, 4 parts. Then your 5, 6, 7, you can just pick your taxation of digital economy, regional integration and trade blocks, all those kind of theory topics. Then have hand on your tax accounting and reporting, your IS12 basically. Your taxation of lease arrangement, because it's a new topic in the syllabus. So I guess it's going to be tested just to shock people because they are not aware it is in the syllabus yet. Or things like that. So you have no, petroleum profit tax is scrapped. So it's safe to call it oil and gas. It's safe to call it oil and gas. Petroleum profit tax is no longer examinable again. So the guiding law is now your Petroleum Industry Act, PIA.
PIA.
Yeah, it's hydrocarbon. Yeah, it's hydrocarbon. So hydrocarbon and CIT combined also. That's why they test it, because it tests the understanding of CIT and hydrocarbon. So expect it. So that said, thank you very much for coming. Thank you very much for your kind words. Thank you very much for your understanding. I appreciate it.
Sir, please don't forget to release the recorded version on time, sir. Please, sir.
No,
Sir,
just
please
click on
don't
the link I
forget
sent.
before we need the question. Oh.
And the solution, sir. Dial 49.
Please resend it to all the groups. Group 1 don't have, please.
No problem.
And
I
the
will send.
solution, sir, please.
No problem. I will send the solution. The solution is for you.
All right.
Thank you. Thank you.
You're welcome.
The questions and solution, please.
Thank you,
No
sir.
problem. I will send it.
Thank
The
you,
solution
sir.
to group 4 too, sir.
No problem. No problem. You're all represented, and we've had your concerns. Let me talk like a politician.
Remain group 3. Oh.
No problem. We've had your concerns.
Talk when they talk.
Group 4 don't talk. Oh.
All right. No problem.
Thank you, sir.
Good
night, sir.
Thank you.
night, everybody.
Thank you, sir. Good
you,
night.
sir.
God bless
Thank
you.
you.
Bye.
Take care of yourself.
And your boy.
Yeah.
In regards to the baby, you.
Well, thank
Thank
you.
you.
Mungode.
Bye.
What we I say now? What's your welcome in Hausa now?
Tenagode.
You use advanced taxation terms to welcome him.
Okay. Yeah.